This is the Asia Trade. I'm Avril Hong in Singapore. The top stories this hour. Oil trading higher after the U.S. and Iran engage in a series of tit-for-tat attacks. At least 3 American troops have been killed over the last 2 days. South Korea set to reopen following a long weekend after officials suspended new listings of single-stock leveraged ETFs. And we hear from TSMC CFO on why the company still sees challenges in fulfilling all customer orders. Plus, our exclusive interview with the Mitsubishi Electric CEO as the company eyes a power chip merger.
And I'm Paul Allen in Sydney. Here's the setup for trading across Asia. Of course, Korea, as Avril mentioned, coming back from that long weekend, and it could be a bit of a shock coming back after that long weekend. Things could be ugly. A number of things have moved. We saw chip stocks have their worst week since April 2025, off about 10%. SK Hynix US-listed shares dipped more than 9% on Friday. So, yeah, we could be setting up for a bit of a rough ride when we get to the open in Korea. Already futures down by 4.3%. The yen there still looking pretty weak. There won't be any trade in Japan today. Japan has the best public holidays, as everybody knows. It is Marine Day today. Nikkei futures, though, currently off by about 0.5%. Let's take a look at how energy prices are performing, though, because we've seen more escalation in the Gulf over the weekend. A 3rd US soldier killed. That is now 17 deaths for US troops since the start of the conflict back in February. That has resulted in a predictable round of reprisals and counter-reprisals. Brent crude now above $90 a barrel. At the start of this month, it was around the $70 mark, so a 25% increase there. We're seeing energy prices increasing across the board. Could be a good sign for Australian energy producers, though. S&P futures for the ASX up 2/3%. So the US and Iran trading those fresh attacks over the weekend. We do have Washington announcing a 3rd troop death in 2 days, as I mentioned. The Bloomberg weekend editor Tony Chuchka joins us now with more from Washington. So, Tony, do we have any sense of where this conflict is heading at the moment?
Paul, the short answer is no. Trump was uncharacteristically quiet over the weekend when these troop deaths were announced. So you can sort of take the measure from that. The administration didn't say much about it at all. Obviously, it's not something that you want to have happen to your troops in a war. But Trump also and Pete Hegseth, the defense secretary, just kind of seemed to want to move on. There's not much of a sense of what his plan might be going forward with the conflict with Iran. And he just hasn't said very much publicly. This was our take on it over the weekend, as a ceasefire is increasingly being cast aside.
Yeah, so what is the strategy going forward for the US here? Is it one of restraint, or could we potentially see another escalation in this conflict?
That's the big question right now. I mean, I think there's been a lot of speculation and analysis and sort of forecasting that says this kind of low level, if you like, war will continue or may continue for weeks or even months, because clearly the U.S. doesn't want to go much deeper than it is into the war, but on the other hand, Iran also holds some cards, and the U.S. needs to get the Strait of Hormuz into a position where at least Iran can't threaten all of the shipping. This was actually a discussion on some of the Sunday morning talk shows in the U.S. here, how much oil is getting through. The administration seems to say that there's actually the levels are about 2/3 of what they were at normal times or before the war, and of course some of the reporting, including ours by Bloomberg, has been that it's been very hard, and presumably quite a bit less than that. But those goals remain, and the question is, how does Trump go about achieving them, and also keeping support, or avoiding losing more public support at home for this war.
Yeah, that's a critical point as well that you make, because we have these rising energy prices, Brent back above 90 a barrel, 17 casualties now for the US in this conflict, and the midterms 3 to 4 months away. What are the political implications here?
Exactly, and I'm just looking at the chart here. Of course, gasoline prices are sort of a key gauge. Also for public support, if you like, or indirectly at least in the U.S. And that level is now for the average regular gallon of gasoline is just under $4. And of course, that $4 level is psychologically important. So these are all factors that Trump has been and will need to keep in focus going forward. Congress has not been terribly or hasn't been obstructive at all, but there is some, and certainly among some parts of the Republican Party, or at least individual lawmakers, there is a sense of the risks of what this means going forward if this kind of just keeps on going on in an open-ended way in the conflict with Iran, where Iran clearly is showing itself to be stronger than many expected.
Tony, thank you so much. Our Bloomberg Weekend editor, Tony Chutzka, for us. Let's bring in Bloomberg and Life strategist Mark Cranfield for the market implications. So, Mark, we're seeing Brent topping 90, Treasury futures showing weakness. What is this going to mean for risk today?
Not a good picture, really, particularly when you have Treasury futures fall. We don't have yields today because Tokyo's on holiday, but if we did have the Treasury cash market opening, the yields would be certainly edging quite a bit higher. That will be a negative sign across markets. It's a lot to do with the change in the positioning of the market. So for some time we were getting used to oil being in a nice range between $70 and $80. Now we're suddenly thinking it might be in a $90 to $100 range again. That's a huge difference. That has consequences across asset markets. We saw that start to play out last week. People got defensive, and it will play out a lot in global bond markets. Yields will have to reprice higher if you're going to have oil in a sustained period where it's 90 plus. If that is the case, you have to look back to what we saw, some of the situations in March and early April where markets really took their lead from what was happening in the oil market. That is not a pretty picture for anybody, really. At the same time as you've got the dislocations, people getting a little bit angsty about what AI pricing, what it means for valuations, that kind of thing. So you put those two together, it is a difficult setup for markets as we go into this week.
Especially for Korea that's coming back from a long weekend. I mean, how bad might it look there, given what's been a sort of momentum unwind? Yeah,
people would expect the Korean market to open weak today. It had a little bit of a breather on Friday, but then you saw what happened in Japan and Taiwan. They sold off very heavily. US markets were also weak on Friday night as well. Having said that, the ETF, the leverage positioning, was unwinding very, very quickly anyway, and it was probably mostly done. So actually, we might get a surprise. Korean markets will probably open weaker today. They might not finish too badly, providing that we don't get any oil prices don't suddenly jump to $100 today, because most of that selling was pretty much done. They expected the authorities to clamp down hard. All of that has happened. It's kind of a buy the rumor, sell the fact kind of situation here, where we knew that restrictions were coming for leverage ETF. It's happened. People were getting out of their positions anyway. The market had been falling for a long time. We are now in a position where we're more than halfway through July. A lot of people won't be able to trade anymore this month. They've lost so much money in the first part. They will be told to sit on the sidelines, take a break. So we're now going to go into a more reduced liquidity phase. It's a question now that if you were fortunate enough to be out of this is a dip buying scenario for some people. So we actually might see over the next week or so people start to look at this, and is there now a chance to get back into some of these markets which have been really heavily oversold?
But this is also coming at a time where China seems to be making more advancements in AI, whether you're talking about Kimi or Alibaba previewing Qwen. Does that change the calculus then?
It is a little bit of a shock, and we saw it start to play out last week. People are saying this is another DeepSeek type scenario. DeepSeek happened at the beginning of 2025. If you look back and see how long that lasted and the effect, it looks like a tiny blip. Where are we today compared to where we were in January 2025? Markets have come on a very long way, and DeepSeek is still around, still looking for an IPO. In the background, it's a more complicated situation because of where the US and China stand in opening their products to each other. These Chinese products are certainly going to make a difference. They're certainly going to undercut pricing. But will the US allow them to be used in their markets? Will the Europeans allow them to be used in their markets? These are much bigger questions and will determine whether or not it has a ongoing impact for markets or whether it is just a short-term knee-jerk reaction. For now, it looks like a knee-jerk reaction. There will be longer-term consequences, but we don't really know in detail what they are yet. Anthony is the best person to ask for this.
We will actually be picking his brains a little later on the program. Thank you for the moment. As always, Mark Cranfield, Bloomberg M Life strategist. Now, coming up on the show, we also have those rate decisions from the ECB and Bank Indonesia on tap this week to chew on. Westpac's Illiana Jain joins us next to discuss the key risks she's seeing and why she thinks AI is no longer a tech sector story. This is Bloomberg.
Here's some key events to watch this week. China's loan prime rates are due later on. They're expected to stay unchanged. So on Tuesday, ASEAN foreign ministers are going to be meeting in Manila with regional security, trade and US-China tensions in focus. Bank Indonesia's rate decision, that's going to be closely watched on Wednesday. Bloomberg Economics expecting the central bank to hike rates to support the rupiah. And Samsung's going to be holding its Unpacked event that same day. Meanwhile, the ECB widely expected to leave rates unchanged on Thursday. And coming up on Friday, Japan's June CPI report could show signs of picking up, and that's going to be keeping the Bank of Japan's next move in focus. Well, joining us now is Illiana Jain, an international economist at Westpac, to help us unpack some of this. Illiana, thanks so much for joining us. And I do want to start with the main macro event of the moment, of course, that ceasefire in the Middle East. Well, it's not even really a ceasefire anymore, just underscored just how fragile it all was. But how do you see this feeding through, perhaps, to the Indonesia rate decision? Obviously, we won't see it reflected in Japan's June CPI numbers, but going forward, what do you anticipate?
Look, the situation in the Middle East seems to be changing every single week, but one thing we can be certain of is that any sort of geopolitical calmness, if you can call it that, or any sort of indication that oil supply and energy supply will be normalized, will be well received by policy makers. When it comes to countries like Indonesia, they are massive energy, they consume a lot of energy when they're producing a lot of the goods that they're producing. And for them, energy costs are absolutely central to how the economy is going. And so if we start to see a bit more energy stabilization, it's going to be good news for most of Southeast Asia and South Asia, because we'll see that income squeeze created by those energy costs start to come down. And again, that'll help support domestic demand at a time where industrial policy needs to catch up a little bit.
So hard to predict, though, because at the start of this month, the oil was sort of settling around the $70 mark. I think perhaps a sense of complacency had set in. No more, of course. In Japan's case, we'll get the June CPI numbers, but what are the implications for the Bank of Japan and the yen as well? Have we seen a floor for the yen yet?
Look, when it comes to the Bank of Japan, they're focusing on a broader set of indicators beyond just the CPI. For them, it's about coming to a place where they consider is neutral and normal for the economy that they are inheriting right now. We know the Japanese economy is a vastly different place to where it was prior to the pandemic, and it needs an interest rate that is higher than where it was prior to the pandemic. And the Bank of Japan's coming to that end point, that terminal rate. And so while inflation is important, it's about other things like how much domestic demand is going to lift and how much of these inflationary pressures are domestically driven. When it comes to that CPI print, the one thing I'll be paying very close attention to is that services component. Is it staying around that 1% mark that it has been over the last couple of years? That tells us that there's a lot of domestic pressures within Japan as well. Aside from that, they'll also be watching closely to see how wages are responding to the changes in the economy thus far. And if we see that continued pressure on wages, if we see that structural tightening in the labour market continuing to feed through to wages, we're likely to see the Bank of Japan hike twice more, coming to a terminal rate of 1.5% by the end of next year.
In terms of the energy side of things, are you willing to predict, and it is so hard to predict, where we might be with this conflict later on this year? Because certainly there'd be a political case for Iran to push this through to the US midterms. Can you see this uncertainty lasting until then?
Look, it's hard to say, I'm not a geopolitical analyst, but for the economy, I think The sooner this resolution comes into place, the sooner we start seeing more stabilization in oil prices, the sooner we start seeing that closing of the gap between Northeast Asia, which has benefited from the tech sector and has been able to buffer against those energy implications for the economy, and South and Southeast Asia, that's been more exposed because of their higher share of the economy attributing to agriculture, as well as a greater energy reliance on imported energy.
And just to underscore what we're talking about, we're just getting news from CENTCOM. It's begun conducting a new wave of strikes against Iran as of 7 o'clock Eastern time today. This is the 9th consecutive day that we've seen attacks. Now, look, another country in the region that's obviously very dependent on energy, South Korea. And we're going to get those second quarter GDP numbers later on this week as well, in anticipation that we might see some slowing growth here. But is it a more nuanced and difficult case for South Korea? Not only is it energy dependent, but we have this AI story, the enormous volatility we've seen around that ecosystem. What risks do you see ahead for South Korea?
Look, I just talked about how the region's really bifurcated between that northeast tech very heavy sector versus the south and southeast. Within Korea, it's the same sort of trend that's playing out. So the Korean economy has been powered by this tech sector, powered by this strength in tech exports, and that's really lifted predominantly the tech industry. But if you look outside of the tech sector, Korea's economy is starting to show signs of weakness. Domestic demand is pretty weak if you compare it to pre-COVID. The labour market outside of the tech sector has been quite weak as well. And so right now we've seen that policymakers, particularly the Bank of Korea, are willing to lean on that strength in that Korean tech sector to hike rates and help ward off some of those inflationary risks. But they're also very cognizant about the rest of the economy that's not functioning as well. So that risk is definitely there. And if we start to see the tech boom start to slow down, both within Korea and outside of Korea, those weaknesses are going to start to show up even more.
Can we throw another wild card in there too? Over the last 3 days, we've seen new models from China. The Moonshot, Kimi 3, Qwen from Alibaba as well. What are the broader implications for that big ecosystem that's growing up around the AI story?
Yeah, certainly. And look, there are many players, and China's one of them. And we've seen that when China decides to do something, it does a lot of it. We've seen that excess capacity play out in China. We've seen that overproduction occur in China. And I don't think that tech side will be any different. But the one thing to note here is that the advantage of buying Korean technology is that for a lot of countries, particularly in the West, it comes with a geopolitical security lens. So that's one place where Korea can benefit immensely. They are a more secure partner to deal with than China, particularly when it comes to technology. And so when we're thinking about those risks for Korea, at least in the near term, they have that playing for them. Over the medium term, as China builds its confidence with the West, this might deteriorate a little bit.
All right, Illiana, thanks so much for joining us today. That is Illiana Jain, international economist at Westpac. Now, we're going to be live from Manila tomorrow for the ASEAN Foreign Ministers meeting. We're going to be speaking exclusively with Australia's Penny Wong on how the region is balancing competing global powers. More ahead on the Asia trade. This is Bloomberg.
Now, Moonshot AI has temporarily paused new subscriptions for its Kimi K3 model due to surging demand. The company earlier said its latest model performs on par with some of the top-tier platforms. But venture capital firm Greylock's Saam Motamedi told Bloomberg it might be too early to tell if the hype was justified.
I think it's great that models like that, models like the one that came out from Thinking Machines the day prior, continue to give vibrancy to the open source ecosystem, which is an important part of our overall AI economy. At the same time, I think the reaction over the last 24 hours is perhaps a little bit premature. And I would say, a couple of points. It reminds me a little bit of when the DeepSeek moment happened last year. And when you look at this new Kimi model, there's maybe a few things, the audience should consider. The first is benchmarks are imperfect. Right. It's, you can take a model and make it very, very strong at a particular set of benchmarks. I don't think it's until that model's had time to percolate in the real world that we can get a true sense for the trade-offs that the model's incurred and what its real world performance looks like. The second is this whole discussion around cost. I think the discussion misses the point. It's very focused on token cost.
Yes.
But we think about things more in terms of task cost. Not every token is equal. And so I'd make 2 points as it relates to the cost profile of Kimi. The first that's actually interesting is Kimi K3 is much more expensive on a per token basis than Kimi K2, which is sort of contra to the narrative.
And we do not know what it costs to train Kimi K3. We have an idea on K2. I just want to put that out there.
Absolutely. That's absolutely correct. So the per token cost is more, but even more importantly, it's not particularly token efficient. And so what that means is for a given task, it actually uses many more tokens than an OpenAI or Anthropic model. And you're seeing that already in the early cost benchmarking. And so I think this conclusion that it's going to lead to price erosion for the frontier is perhaps a bit premature.
In this case, the frontier, let's say it's Anthropic and OpenAI, right? Some people are making the argument, well, hold on a minute. If a $20 billion valuation Chinese startup, we don't know the training cost, but they're basically saying $3 per million tokens on the input side, $15 per million tokens on the output side. If they can do that, why are we valuing Anthropic at nearly $1 trillion? Like, what's the moat that Anthropic has?
I think both Anthropic and OpenAI have multiple moats. The first is they have very significant revenues. These are the fastest growing companies in human history. And those revenues are not just on the back of their models and their amazing API businesses, but their first party products, right? And I think relative to the last time I was on the show, you look at the success that Anthropic has had with Claude Code, Claude Cowork, most recently Claude Tag. It and OpenAI are full stack AI companies.
Can I just say one thing? I think for 2 years, and it's been too long since you've been on the show, but we've basically assumed the best model wins. Is it as simple as that? You seem to be saying it's not.
Well, it depends on how you define the best model, right?
Yes.
And I think I'd be careful to jump to the conclusion that Kimi is now competitive with the best. Certainly on some of the benchmarks that they release, it's competitive with, I'd say, one generation prior. Yeah. And of course, we don't know what's coming out from Anthropic and OpenAI in the coming weeks and coming months, but it's been rumored and reported that there's significant new releases coming out from those models. So we have a particular checkpoint in time that we're comparing it to. I think we're going to see a lot of really exciting releases in the coming months.
Greylock Partners General Partner Saam Motamedi speaking with Bloomberg tech anchor Ed Ludlow. Some other tech stories that we're tracking. We'll be watching shares of Alibaba later after the company launched a preview version of its flagship Qwen 3.0 Max model. Alibaba says it ranks among the world's leading frontier systems and trails only Anthropic's Fable 5. The company plans to make the model open weight, allowing developers to download and modify it themselves. The release comes days after Moonshot AI released its own powerful offering, the K3. Sources say the Trump administration is considering a new independent regulator to oversee AI safety. They say the proposal, developed with input from Treasury Secretary Scott Bessent, will create an agency that reports to the SEC and works with the industry on safety standards. The plan aims to appease both Wall Street and Silicon Valley companies by allowing them to play a larger role in jointly setting safety standards for AI. And coming up, we'll be hearing from the TSMC CFO as the company prepares to add $100 billion to its investments in Arizona and how it could be used to ward off rivals. That's next. This is Bloomberg.
Right, let's take a look at how markets are tracking at the moment, Avril, and as usual, well, we've got used to this over the past couple of weeks, the oil and energy space dominating the narrative. We've just heard from CENTCOM that it's carried out its 9th consecutive night of strikes in Iran. A US service member was killed in northern Iraq, meanwhile. That is the third US casualty in recent days. That's bringing the total to 17 since the war with Iran began back in February. So we're seeing the oil price rising, $90.84 for a barrel of Brent at the moment. Back at the start of this month, we were just above 70. That's not all that's going on, of course. Could be an interesting day in Korea as well, reopening after a long weekend. And we've seen some of those AI and tech names coming under pressure, Avril.
Yep, and there will be a lot for them to digest as well. When you look at these developments out of China, we had Kimi K3 being announced, and of course, Alibaba previewing its latest Qwen. All this coming at the time when Moonshot also reportedly told investors that they're planning an IPO as soon as 6 months from now. So you get a sense of how China is tapping capital markets as well on top of these AI developments, and they look like they're managing to close that AI gap with the US and its proxies. We know, of course, as well that Kimi K3 seems to be outperforming all these models except for Fable 5 and GPT 5.6. So that puts us net-net, I think, with China models, 2 of them now, with above 2 trillion parameters. Let's talk a bit further because Chinese ecosystem is going to be in focus this week following the news from Alibaba and Moonshot AI. For more, let's bring in Bloomberg's market reporter, Anthony Stevens. So Anthony, talk to us about your assessment of the capabilities of these Chinese AI models.
Yeah, so the technical details for Kimi K3, the Moonshot AI's latest model, is a little bit kind of dense, but let's go through it step by step. So there is a lot of software innovation in there in what is objectively a very large model. So the first thing is the ambition and the scale of the model is a step further, and that's probably why it has caught the US models on the frontier front. But the second most important aspect is the resource optimization around the model. It is very memory efficient. In short, there are proprietary innovations in there to also help with the usage of HBM and GPUs, where China is obviously constrained. And the fact that this model was trained with those constraints in mind is the important aspect to markets here. China has found a software workaround to its hardware constraints. And that is what the market is pricing in here on the AI picks and shovels trade. And that is what will continue to play out. It is also interesting that Alibaba owns such a sizable chunk of Moonshot AI. So when those 2 companies come head to head, it's a bit of a family feud here.
Anthony, how are China's AI leaders able to make such a competitive product without the access to the cutting-edge technology that its US competitors have?
It's software innovation, in a word, right? Like, there is a lot of software that is dealing very creatively with the constraints around compute and memory. And how they're doing it is by using extreme probabilistic mathematics, basically, to try to understand how a machine thinks in a more efficient manner and correlate that with the kind of use cases that the model is most likely to be used for. So it's not trying to do everything for everyone. It's trying to do the most probabilistically useful thing with the resources that it has available. And that approach has really paid off on the benchmarking. As you guys have covered, relentlessly, the biggest use case for AI at the moment is in coding. And in approaching coding, this model is extremely efficient in how it uses its resources.
How does this affect the demand for memory and perhaps what this also means for the big chip makers, TSMC, NVIDIA?
So at the margin, the fact that it was trained on a compute-restricted ecosystem has worried people. Like, how has China done this without access to TSMC's and NVIDIA's top-of-the-line chips? But overall, the debate has moved on to now the price of these chips are price of these models are so constrained that it might open up new use cases for AI and as a result increase the size of the market. So this debate is very live. Does the market grow overall as a result of the Chinese models, or does the Chinese models' resource optimization reduce the size of the GPU market? On memory, the efficiency of memory is a clear negative to the kind of ongoing kind of bull market in memory. But they are very large models which require a lot of HBM upfront. So for the moment, the HBM market looks very stable, but there is a concern that the memory market is being pushed by Chinese innovation towards the DDR5 or the DRAM market, where China is more competitive and China can bring on more capacity to bear. And that capacity is going to become the new touch point for markets on the memory trade in the days to come.
Right, markets reporter Anthony Stevens there. Thank you. Now we're going to have more coverage of Chinese tech out of the World AI Conference in Shanghai later on. In the next hour, we'll be speaking with George Chen of the Asia Group on Beijing's push to reshape global AI standards. Also coming up, our interview with Kai-Fu Lee on what China's latest tech advances mean for the global AI race. Now, TSMC is telling Bloomberg it's adding $100 billion to its investments in Arizona to meet strong demand from US customers and to ward off ambitious rivals. Chief North Asia correspondent Stephen Engel joins us now. And Stephen, I like this line from the company. We want to demonstrate we're not leaving any food on the table for anyone else. How sustainable is this kind of capex arms race?
Well, that is the big question, because TSMC, and I was over there in Taipei for their earnings press conference and in this interview as well with their CFO, Wendell Huang, essentially, at a time when the Philadelphia Semiconductor Index was down 4%, it's entering bear market territory. There's some negative market sentiment towards chip makers, no doubt. So TSMC had that record second quarter profit. They're raising their gross margin outlook. They're raising their full year revenue outlook for this year. They're adding that capex that you just meant, another $100 billion, adding to the already announced $165 billion in Arizona plants. They're going to be, when they fulfill this, they're going to have 10 fabs in Arizona in the United States, 2 advanced packaging facilities. It's a huge investment at a time when the markets are saying, whoa, 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 whoa. The investment's getting a little bit out of hand. But Wendell Huang tells me they're in it for the long run, for what their customers need. Markets go up, markets go down, but this is a long-term cycle, according to TSMC, the world's largest foundry. Here's part of my interview with Wendell.
We really don't have no control over the financial markets. What we can do is to continue focused on the trinity of strength, the fundamentals of TSMC. The trinity of strength is technology leadership, manufacturing excellence, and customer trust, plus a service mentality. This is really important. This is the demonstration of our putting our customers at the top priority. Think about this. If you're the customer, who do you want to partner with in foundry? The guy who can offer you the best technology, and the guy who can ramp the technology to a very high volume at a very short period of time with good yield and with good cost. And plus, the guy doesn't have a product to compete with you. So if you put all these together, it has always been TSMC. So the customer has always put TSMC as the first choice. Now, TSMC has always put customers as our first priority, demonstrated by our continued accelerating capex investments in this year and in the future years, including the additional investment in Arizona. So we're doing everything we can, wherever we can, however we can, to support the customer's growth.
How important is it to TSMC that, by some accounts, this is perhaps, or is it, I'll ask you, is this the largest ever FDI, foreign direct investment, into the United States?
To our knowledge, yes. Yeah. It's very important to us because our customers really want that. At the same time, we also invest in Taiwan. CC also said in the conference, in the earnings call, that at this moment we're building 13 fabs in Taiwan, both front-end wafers and advanced packaging fabs in Taiwan. So we're doing everything we can, wherever we can. We're building another N3 fab in Japan. Right. We're building the phase 2 in Arizona as N3 as well.
Well, as you spend in the U.S., as you ramp up N2, how do you see gross margins holding up? I mean, you did increase the outlook for gross margins in the report, but I think there were some market expectations. The number could have been upwards of 70%. It was 67 and change at the midpoint. And even CC Wei, your CEO, joked about he was envious of the Korean memory chip makers with 80+% gross margins. What do you see over the next 5 years, gross margins holding up as you spend more?
Our long-term financial goal that we promised to the shareholders as gross margin 56% and higher through the cycle. And please focus on the and higher part. We've been able to deliver and higher part. This is a cyclical business. We believe we get the megatrend right, where we have very strong conviction on the AI megatrend. However, there will be ups and downs. And that's why we're saying 56% and higher through the cycles.
This cycle, do you have much vision on how long that will last? These were questions that were asked at the press conference a lot. You did raise the capex spending for this year outlook to 60, at the high end, $64 billion. There was a lot of chatter, maybe over the next 3 years, this could be a $200 billion capex outlay. And if you do that, if you extrapolate 64 times 3, you're getting close to that 200 billion. Could that even go higher if you're looking towards 2030?
Really depends on market condition and customer demand. If customer demand is become stronger and stronger, then we'll continue to invest. The capex that we spend every year is for the business opportunity in the following years, right? So as long as we believe the business opportunities are there, which we do, we will not hesitate to invest in the capex.
So again, Paul, at the top of this segment here, you mentioned about the quote from Wendell where he said doesn't want to leave any food on the table for others. He was sort of alluding to the fact that there's rising competition on the foundry front from Americans as well. Intel and also Tesla's Terafab will likely take some market share as they are all trying to work at narrowing that supply-demand gap that is quite huge right now. But again, this is a multi-year cycle that he believes that TSMC will compete, will fulfill those needs of customers, but at the same time not leave a scrap of food on the table for those upstarts in the foundry business. Now, we're going to hear more about the U.S. plans coming up in the next hour with more of my interview with Wendell Huang, TSMC's CFO.
Looking forward to that, Steve. Thank you so much. Our Chief North Asia correspondent, Steve Angle, with a great interview there. We have more ahead on the Asia trade. This is Bloomberg. Let's take a look at some of the movers on Nick's trade. Of course, at the time where there are these wobbles in the AI investment, the concerns on capital expenditure for some of these big memory makers, at a time where Chinese AI developments already caused that selling in chip and overall broader tech stocks in the US on Wall Street. We also had the Kimi K3, along with talk about how Moonshot might be looking for an IPO, and then Qwen, that preview coming from Alibaba. So a lot at stake. You're looking at Kospi futures. Looks like it could be a bit of an ugly day, very ugly day maybe. You're looking at dollar Korea won also sitting below the 1490 handle. And of course, this is all coming after South Korea markets are off a long weekend. Our Bloomberg Asia equities reporter, Winnie Su, joins us now. So Winnie, what are we expecting today?
Yeah, so for today, as we can see on the futures, it seems like it would be a catch down for Korean markets, especially after how the markets were closed on Friday, and we did see that sell off on Friday. Now, a couple key factors that we're watching. One is that momentum of the unwinding of leveraged bets, right? That has really driven the downside of the likes of Taiwanese and Japanese market on Friday. So we might be observing that today as well. And that is also a first reaction to how authorities are tightening these measures when it comes to the single stock leveraged ETF. So that will likely also dampen the appetite for retail investors. Well, some other key risks we're also watching include, as you mentioned, how the Chinese AI model, Moonshot model, is likely going to rattle tech stocks further, because investors will likely opt for some of these cheaper models and will hurt the demand for the advanced chips as well.
How is all the volatility that we've seen in the Kospi starting to be reflected in other developed global markets?
Yeah, that is a very interesting trend we have been observing this year when you look at how the relevance of Kospi globally has been really rising in the past few months and even the past year. We've been talking to fund managers across the world, the ones in London and New York, saying that they wake up in the morning to check where the Kospi is trading to get a sense of where U.S. markets, especially NASDAQ, might be trading. Fund managers in Singapore say that they wake up to checking what the ADRs of SK Hynix is trading to get a sense of how Asia might be opening. HSBC told us that, Kospi or Korean markets is pretty much discussed in all of their meetings with their European colleagues, and that never really happened in the past. And the correlation of Kospi and NASDAQ has risen to 3 times what it was compared to a 5-year average. So that has really been more intertwined as we observe lately.
All right, Bloomberg's Asia Equities reporter Winnie Su there. Now, Mitsubishi Electric's looking to reach a deal by September with rivals Toshiba and Rome. Speaking exclusively with Bloomberg, CEO Kei Uruma says the move is to consolidate 3 of the world's top suppliers in the electronic supply chain.
Looking at Japan today, there are many power semiconductor manufacturers. I believe having so many domestic players leads to wasted development resources. Combining our forces will allow us to go head-to-head with our global rivals. That was the starting point of our thinking. By teaming up with Rome and Toshiba, we can streamline development, produce low-cost chips, and manufacture high-value semiconductors.
Do you have then a timeline for this alliance to be formed? And in what parts of your business would the alliance actually be reflected?
Our goal is to consolidate sales, manufacturing, and development to build one single robust company. The 3 companies are currently working out the detailed terms of the agreement and making adjustments. We hope that by September we'll be able to announce our plan to establish the joint venture.
How much is the Japanese government also helping in this endeavor to really help everything related to semiconductors and the AI business? And does that affect your company as well?
To be completely honest, we aren't receiving any support from the government at the moment. Once we join forces with Rome and Toshiba, I hope the government will reconsider. In other countries, state subsidies help significantly lower depreciation costs. Without that support, even with a joint venture, our costs will remain higher than our competitors. We just want a level playing field. If we can get those subsidies, it would be a massive help.
When it comes to the Japanese government, we have seen them now lift the ban on defense exports. How much will that help your business?
I believe this is going to have a very significant business impact moving forward. Before the 5 categories restrictions were lifted, we were actually the very first to export defense equipment, delivering our radar systems to the Philippines. But back then, with those bans in place, exporting was always extremely difficult. Now that those barriers are gone, it's going to be much easier for third-party countries to approach us with those specific requests and product needs. At the same time, we can now consult closely with the Ministry of Defense to respond to those needs and much more effectively. Working with the ministry will bring entirely new business opportunities, and we look forward to that.
I think you recently said that your defense and space segment's revenue should be doubling from fiscal 2025 to 2030. Are you still on track for that?
Right now, we're aiming for 800 billion yen by 2030.
Mitsubishi Electric CEO Kei Uruma speaking exclusively with Bloomberg Sharian. More ahead on the Asia trade. This is Bloomberg.
Let's get you over to Madrid, the capital of Spain. The new World Cup champions of 2026 after defeating Argentina 1-0 in the final. I don't think too many neutrals would dispute that that was the right result. Only one team really showed up to play. Argentina pretty much parking the bus for the whole match. Finally, Ferran Torres scoring the only goal of the encounter in the 106th minute, so just at the opening of the second period of extra time. And that was enough to do it for Spain, lifting the trophy there, and Spain becoming the only country to ever hold consecutively both the men's and the Women's Football World Cup. So 1-0, Spain defeating Argentina there in the final. And Avril, it wasn't just the football match that was interesting, it was the meta commentary going around the football match as well. Prediction market betting really surging around this whole tournament. The platform Kalshi breaking its own records, really starting to pose a threat there to traditional bookmakers as well. H2 Gambling Capital saying 27% of all legal sports betting volume is now on prediction markets. So a bit of a threat there to some of those traditional bookmakers.
Yeah, prediction markets giving these sports gambling platforms a run for their money, but they're not taking it lying down, these sports gambling platforms, because they're also launching their own production market products. And maybe, right, as some analysts have pointed out, they do have a bit of advantage here given their broader distribution channels. And you can see really how things have been shaking up in the prediction market space. As I said, giving these traditional platforms a run for their money. You're looking at these stocks adjustments as well in these particular companies. Let's take a look at how broader markets are faring today as we watch for the markets open in Japan or rather in Korea, with Japan shut for today. Take a look at how the benchmarks are doing as we see the S&P 500 futures looking quite flat for the moment. We also have futures in Sydney pointing to them being on the front foot, maybe as Brent prices climb above the 90 handle. But the big one is how we might see this continued momentum unwinding in South Korea on a day where it's really about this digestion of the AI developments out of China as well. Not helping, of course, is what we're seeing in the pressure coming in Treasury futures. That is the market setup going into the open for the next hour. We'll track that and more. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens. And Paul, Korea is coming back from a long weekend. There is a spate of AI news for them to digest, including what we saw, the selling in the US on Friday that came for chips, but also broader tech stocks. And then think about these developments, the headway that Chinese AI developers are also making, whether you're talking about Qwen from Alibaba or Kimi from Moonshot.
That's right, Avril. The world experiencing something of another DeepSeek moment of those Chinese AI models proving you don't necessarily need access to the world's cutting-edge chips to still come out with a pretty solid AI model. So that's rather upended things. The Kospi was already somewhat volatile, coming in off the end of a three-day weekend. Let's see how it goes.
Yep, for the moment, it looks like a negative start, 6% down. We're seeing already on the Kospi. There's some pressure for the Korean won, local currency as well. You're seeing it untraded for now on the chip giants, but that is the backdrop that we're getting, of course, the digestion of all this AI development, given how, as some of our colleagues have been highlighting, this could shift the calculus in terms of how much high bandwidth memory do we really need, and the extent in which this is coming at the time where the hyperscalers, don't forget we have Alphabet also reporting earnings this week, spending tons of money, capital expenditure. How do you justify that? Do investors want to see more in the way of revenues and monetization? That is the setup as we head into the trading day today, Paul.
Also, we can't forget about what's happening with the oil price as well. We've got Brent surging. It's back above $90 a barrel. We started off this month with barely above $70 per barrel. And news today from CENTCOM that for a ninth consecutive night, it has the US has launched attacks against Iran. A third US serviceman was killed over the weekend in recent days. That takes the total US toll to 17 since the start of this conflict way back in February. So Brent crude prices definitely catching a bid there. Have a look at Australia. The ASX better by 1/3%. Energy names doing particularly well. And we're looking at bond futures there because there's no trade in Japan today. Japan closed for Marine Day, a public holiday, so no trade in US debt, but bond futures are already slipping a little in the early going. And of course, it goes without saying the yen still very weak, hovering around 162, Avril.
Let's talk about all this and more. What's shaping markets? Joining us from Seoul, Homin Lee is senior macro strategist at Lombard Odier. Homin, always good to see you, and today from Seoul, no less. Talk to us, though, about how, we've seen the memory thing really driving markets in the first half. We are at an inflection point. It seems momentum unwinding. How do you invest also at a time when China seems to be closing the gap on AI?
So in the long run, the real threat to the memory bottleneck trade in South Korea comes from China. And in the second half of the year, we're going to get a bit of narrative shift in favor of China's AI and semiconductor ecosystem, not least due to all the mega listings that are on the horizon, which it now seems the authorities are quite supportive of. So that's going to support the Chinese story relative to South Korea. But for South Korea itself, we start to feel that maybe this levered, retail leverage impact is beginning to, progress quite substantially. And the fact is that the bottleneck still remains in the near term. And these memory makers have locked up their prices through long-term agreements with the buyers. And, U.S. export controls, et cetera, still keep the dominant position for these names. So it is true that this week we have a confluence of a pretty negative events. But given the valuations and the unwind of the leverage trade, maybe the trajectory for the rest of the year, despite the volatility that we see now, is maybe higher before the end of the year. And that's one of the reasons why we're still keeping constructive view on the medium-term trajectory of the market. But China's story is definitely something that worth keeping an eye on for the investors in the second half of the year.
How much does it exactly, you think, sap away from the South Korean story?
So we have seen the shift from the hyperscalers and the AI service story in North America, to memory makers in past year or so, and we're not going to get a complete conclusion to this debate or pendulum swing between the AI suppliers and AI themes for the foreseeable future, simply because no one has an absolute clarity and who will emerge as the winner in this ecosystem. But it's quite possible that you could actually get, again, once we emerge from these headwinds related to Hormuz and the monetary policy cycles and the capital flows, you're going to get maybe a positive market dynamic for both South Korea and China. For the investor's perspective, because China has been a relatively neglected market, maybe it's worth having that as a hedge, alongside South Korea trade, that will probably go through a bit of turbulence, but ultimately still, grind upward once these headwinds fade.
Might it not make sense now, though, to your point about how far they've run up, to take profit on chips? We are also seeing in the background there seems to be rotation to financials.
So, in fact, the financial sector is one of the sectors that we like. The valuation is quite compelling. The sector has been able to deliver a fairly substantial recovery since last year. And the fees, from the M&A activities and trading, continue to be pretty strong, not just in North America, but the markets around the world. So relative to the other sectors that have seen some froth and the, maybe excessive momentum, this is the sector that probably delivers that nice combination of slight defensiveness, valuation appeal, and the earnings stability down the road. So alongside the other kind of a favored bets that we have, including emerging markets. Financial sector is definitely the sector that we like as we head into the second half of the year.
For the big AI spenders, though, it looks like it's increasingly difficult to justify their valuations. How do you, weave that into your investment thesis?
So when you talk about valuations, it's really, when you talk about software or, the semiconductor segment, actually the valuation has become quite compelling. If you look at the South Korean memory makers right now, for the entire silicon layer, due to the sell-off that has taken place in the past few weeks, now we see, forward PE multiples trading close to 6 or 7 for some names, and that's quite compelling for the medium to long term, especially if you believe in the re-rating story for some of the regional markets where these semiconductor stories are concentrated. So we wouldn't say we see a lot of excess froth in the segment right now, especially because of the sell-off. But for the North American market, given the mega IPOs that are on the horizon, maybe it's slightly trickier to make a very, very strong valuation bet. But for the tech hardware ecosystem elsewhere, especially in Asia Pacific, we think it's quite compelling, and that's one of the reasons why, especially for the diversified portfolio, it's worth having some of these exposures and trying to look through some of these volatilities that are highly technical in nature will likely fade in due time.
Homin, I guess to your point also, we've been seeing the chip makers in South Korea in terms of the stock action. They've been, paring some of the early losses. So maybe there's that dip buying that is emerging. You talk about exports. Talk to us about the risks in the back half, because this week as well, in terms of tariffs, we're seeing the 122 expiration. Do you think there is, something on there that we need to be paying more attention to?
So you're right. Over the course of the week, we will likely get the expiration of the Section 122 tariff, and the Trump administration will try to replace that with sector-specific and country-specific tariffs. Now, our assumption is that the overall effective tariff rate will remain close to the pre-Supreme Court ruling level, and that's manageable for the market, but simply because the mechanics of replacing the universal tariff with this sector and country tariff is quite complicated and potentially has, some disproportionate negative impact for significant sectors in different countries. We think we'll definitely have to deal with some volatilities down the road due to this dynamic. But it's important to understand that, from our perspective, it's not going to be easy for the Trump administration to replace, or actually raise the effective tariff rate significantly from what we had before the Supreme Court ruling. But meanwhile, for the market, this week we could potentially get another positive development in China AI space, and also more pro-growth and constructive signals from the Politburo meeting in China. So there will also be some positive offsetting events. And ultimately, we simply have to wait for the uncertainties to clear in the Strait of Hormuz. So that's another factor that we need to keep an eye on.
Yep, watching Brent above 90. Homin, great to chat as always. Thank you so much for the time. Homin Lee is Senior Macro Strategist at Lombard Odier. We have more ahead on the Asia trade. This is Bloomberg.
The US and Iran traded fresh attacks over the weekend, with Washington announcing a third troop death in 2 days. Bloomberg editor Michael Heath joins us now. And Mike, the events of the past week just underscoring how fragile this ceasefire always was. What's the strategy for the US now? Is it restraint or escalation?
Yeah, Paul, they do have escalation options, but it seems to be at the moment that, as they have been, they're targeting these, missile sites and where the small boats are along the coastline there. And they also seem to be targeting infrastructure that gets to that region to try and prevent Iran from resupplying them. So at this stage, they haven't really escalated. And Iran, for its part, seems to be trying to proportionally retaliate. So while they're escalating, neither is sort of going to the bigger options, which for Iran would be targeting, pretty significant infrastructure in its neighbouring countries, and perhaps bringing in the Houthis. For the US, it might be boots on the ground or attacks on cities and more significant infrastructure. So it's escalating, but it still seems to be proportionate at this stage. But it does look like that truce is really, really unravelling.
What do we know about the current state of transit of oil through the Strait of Hormuz?
Well, it's hard to tell at this stage, but Iran has mentioned that it turned back 2 ships and it attacked another 2 that had tried to pass through, and has basically warned that nothing will get through while the US is blockading any Iranian ships from going through. So it is unclear, because obviously some ships might be using the Oman route and turning off transponders and energy coming through, but at this stage, it's obviously a very, very risky situation. Again, there's just been reports from the UK maritime group that a ship is on fire. So it's very, very risky.
Are there any efforts at all to get this ceasefire back on track?
Well, the part of the Iranian strategy seems to be that in targeting the neighbouring countries, the Gulf countries, Qatar, which was a key mediator, and Jordan and the other Gulf nations, is to get them to put pressure on the US to return to talks. Pakistan and China have urged a resumption, but as long as those Gulf countries are coming under pressure, which they're the main targets for Iran, and they're the ones with the best influence over the US, they may well be the best option for trying to get the 2 sides back to talks.
Mike, thank you so much as always for getting us up to speed. Bloomberg editor Michael Heath. For more on how the war is impacting oil markets, Bloomberg oil trading reporter Yongchang Chen joins us now. So Yongchang, markets are pricing in this escalation that we've been already expecting in the past week or so. I think oil is highest in more than a month. What's next? What's the outlook?
So as you do say, there's been lots of fresh attacks. People are trying to price in the increased risk in the region. I think the biggest questions on many oil traders' minds is whether or not their supplies, the things that they've already booked maybe a month or so ago, whether those will still be safe, whether those can even make it out of the Gulf. Because let's not forget, even though the war's been going on, there has been supplies that originate from within the Persian Gulf that have been bought. So those had been slowly coming out. So there's lots of questions about whether or not those can make it out of the Persian Gulf. So be it through secret dark transits through the Strait of Hormuz, or whether we had some coverage where Iraq is sending some of its fuel oil, a type of residual downstream product, with some of the fuel oil to Syria via truck to be exported there. The Saudis have an underground pipeline that feeds directly to the Red Sea, so there's also oil that can flow out of the Persian Gulf through there. So there's all kinds of workarounds, but obviously the Iranians can, and it has shown that it can reach areas further away, not just the Persian Gulf. It can use the Houthis, for example, to block off the Red Sea. There's been threats. So far, nothing yet. But, big questions about where this could all go from now.
Talk to us a bit more about what Iraq is doing. I mean, how big of a workaround actually is this?
Yeah, so we've had some coverage that Iraq is sending some of its fuel oil via overland, using trucks to Syria for export. Now, this is a creative workaround for I guess a connection that didn't have a pipeline. Obviously, a pipeline would be easier. The problem is, by using trucks to kind of send it to carry some of the oil overseas, what happens is because you kind of use oil just to carry oil. So in a sense, it's kind of it's less efficient in a way, which is why this flow, even though it's been going on, is relatively small for the oil market. So I wouldn't say it's likely to grow hugely anytime soon. It's not a big trade, but it just does highlight how kind of desperate some countries are to just get oil out through any means necessary. Because even though it's more expensive, getting some of the oil out is just better than getting none of it out, and you have to stop production, all kinds of that.
And these adjustments also are benefiting markets such as the US. How much of a shift have we been seeing?
So obviously the kind of stoppage of the Hormuz flows, that has benefited other oil producers. The US is the biggest one, but Brazil, North Sea oil. So global oil prices have been rising. We have seen the US producers in particular trying to ramp up production, ramp up exports. The problem being, of course, we're now headed into the summer season, the so-called peak summer demand. In the US, it's driving. In Europe, maybe it's heating demand, so we need more oil, more energy to kind of power your air conditioners, whatever. So you have all of that demand in the West, in Europe and the US. As the Hormuz flows are being choked, and there's more demand in Asia. So overall, it's just not looking really good because you have really demand rising from all these different centers at the same time. So I think the outlook, in a sense, pretty bullish. Prices probably going to rise.
100 on Brent at some point?
Well, prices, it's again hard to tell. People are, analysts and traders I speak to are not necessarily throwing out that number yet,
right.
But we are at, $90, $91. So it does feel like the trajectory is up, but how far up, who knows? Because when prices rise far enough, demand destruction will happen. So people will buy less if it gets too expensive. So, jury's out there.
Really good to chat. Thank you so much. Bloomberg oil trading reporter Yongchang Chen. We have more ahead on the Asia trade. This is Bloomberg.
Let's check in on the Kospi. Been something of a wild ride. We're used to associating the Kospi with wild rides at the moment. After a horrible start, coming off a 3-day weekend, we're now just softer to the tune of 1/3 of 1%. So a big bounce here, perhaps coming as a result of this crackdown on new leveraged ETF listings, a tightening of trading rules around those very volatile instruments as well. It was drawing a lot of concern from all sides of the political spectrum, as well as the public. A public petition urging the government to do something, and do something they did. So that's helping stem losses for the Kospi, now off just 1/10 or 1/2 of 1%. Those big names, SK Hynix, now up 2.6%, and Samsung Electronics narrowly in positive territory as well. Now, Mitsubishi Electric's looking to reach a deal by September with rivals Toshiba and Rome. Speaking exclusively with Bloomberg, CEO Uruma says the move is to consolidate 3 of the world's top suppliers in the electronics supply chain.
Looking at Japan today, there are many power semiconductor manufacturers. I believe having so many domestic players leads to wasted development resources. Combining our forces will allow us to go head-to-head with our global rivals. That was the starting point of our thinking. By teaming up with Rome and Toshiba, we can streamline development, produce low-cost chips, and manufacture high-value semiconductors.
Do you have then a timeline for this alliance to be formed? And in what parts of your business would the alliance actually be reflected?
Our goal is to consolidate sales, manufacturing, and development to build one single robust company. The 3 companies are currently working out the detailed terms of the agreement and making adjustments. We hope that by September we'll be able to announce our plan to establish the joint venture.
How much is the Japanese government also helping in this endeavor to really help everything related to semiconductors and the AI business? And does that affect your company as well?
To be completely honest, we aren't receiving any support from the government at the moment. Once we join forces with Rome and Toshiba, I hope the government will reconsider. In other countries, state subsidies help significantly lower depreciation costs. Without that support, even with a joint venture, our costs will remain higher than our competitors. We just want a level playing field. If we can get those subsidies, it would be a massive help.
When it comes to the Japanese government, we have seen them now lift the ban on defense exports. How much will that help your business?
I believe this is going to have a very significant business impact moving forward. Before the 5 categories restrictions were lifted, we were actually the very first to export defense equipment, delivering our radar systems to the Philippines. But back then, with those bans in place, exporting was always extremely difficult. Now that those barriers are gone, it's going to be much easier for third-party countries to approach us with those specific requests and product needs. At the same time, we can now consult closely with the Ministry of Defense to respond to those needs and much more effectively. Working with the ministry will bring entirely new business opportunities, and we look forward to that.
I think you recently said that your defense and space segment's revenue should be doubling from fiscal 2025 to 2030. Are you still on track for that?
Right now, we're aiming for 800 billion yen by 2030.
Mitsubishi Electric CEO Uruma speaking exclusively with Bloomberg's Sherry Yan. Now, we've also been hearing the U.S. president speaking to reporters at Joint Base Andrews following on from Spain's victory in the World Cup, and being asked about the conflict, the strikes on Iran. He said that they hit Iran very hard again tonight, and talking about how this was done in honor of probably 3 patriots who died. I think this is in reference to the 3 service personnel who were killed in the Middle East. We're tracking, of course, the extent in which these represents a sort of escalation, as we've seen how the conflict has spread, and at the moment how Brent prices are sitting above the 90 handle. Taking a look, of course, on a day where Treasury futures have been coming under pressure, maybe that leads to a bit of a prop up when it comes to yields. Take a look at how that is playing out in currencies in the Asia Pacific in the early goings. You're looking at the yen pretty weak here at around the 162.5 handle. Of course, the repeated bouts of a verbal intervention or actual intervention so far this year have done really little to stem what has come for the Japanese currency in terms of the pressures there. You're seeing Aussie against the greenback also looking pretty flat on a day where, of course, given the geopolitical developments, we're also watching dollar China. Don't forget that Trump also did cite China in the way of election interference when he spoke in a primetime address last Friday. We're looking at dollar China sitting at just below the 678 handle. For the board, take a look at how Europe futures are setting up. Of course, this is against the backdrop of the selling that hit chip stocks on Friday and tech overall. And of course, this is also playing out in the Asia session, as Paul has also been discussing the extent in which there is a bit of that dip buying that's coming for the South Korea memory makers, that's helping to prop up markets as well. Now, speaking of all things happening, World Cup front as well. Spain are FIFA World Cup champions once again after defeating Argentina 1-0 in extra time, with substitute Ferran Torres scoring the decisive goal in extra time. Spain dominated possession as Argentina struggled to muster a meaningful attack in what could be Lionel Messi's last World Cup match, failing to register a shot on target across 120 minutes. Argentina also went down to 10 men toward the end of regulation, putting them at a major disadvantage against Spain.
Let's check in on how markets are tracking at the moment. No trade in Japan today for a public holiday, but it's been another exciting morning for the Kospi after pretty significant selling in the early going. The index now bouncing heavily off session lows. We're off about 0.9%. Those big names, SK Hynix, Samsung Electronics, are actually now in positive territory, so shugging off that DeepSeek moment 2.0 that we had over the weekend with those new AI models out of China, Qwen and Moonshot's Kimi 3 model. Oil, once again, the story of the moment, though. We've had a 9th consecutive night of US strikes on Iran. Crude now above $90 a barrel. That's Brent crude. And that is helping keep the ASX in positive territory. Here in Australia, we're bet at the tune of 0.1%. It's energy stocks and financials that are only in positive territory. The rest of the index seeing a little bit of weakness. Now, Chinese tech is set to be in focus today after that latest AI release from both Alibaba and Moonshot. China correspondent Min Min Lo is at the World AI Conference in Shanghai and joins us now with her guest, Min Min.
Hey, Paul, great to be joined here by the head of Asia Group Chair of Digital Practice, George Chen. George, thanks for joining us. Obviously, we are standing in front of the Kimi K3 booth. Right. It's the talk of the town here. How big is this going to be a shake-up for global frontier AI models?
Yeah, thanks for having me, Ming. I think Kimi's new model is definitely a surprise, to both Wall Street and the Silicon Valley. The biggest, takeaway is now, we have, the debate heating up again over, open source models versus closed models. If Kimi can produce at a much lower cost, and it's an open weight model versus, cloud and OpenAI, and then the question will be naturally, do we still need to stick to the closed model, as all the US AI companies, try to, keep on. And then the rest of the world will also look at China as like, okay, so now we have a more affordable solution. It's like a perfect plan B. So that's, a clear challenger to the dominance of US AI models.
I think one concern right now is that given that this is such a huge model, right, 2.8 trillion parameters, that means that running it requires a huge amount of accelerators.
That's right.
So given the shortage of GPUs because of the export controls, is this going to limit the deployment of the Kimi K3 model?
You are really on the spot. I think this is also a question that will raise a lot of eyebrows in Washington D.C. After all the efforts to restrict like H200 and other chips for export, and Kimi now gave the result. Even without the H200, I think they still use some H100 chips plus some domestic chips, and they can still have the K3 models, ready. And you just see Alibaba also last night announced their new model. I don't think they have like access to a large amount of H200 no matter what. So the question is whether the export control is really effective, and I think this will be also a key issue for the U.S.-China AI dialogue. Both sides will rethink about the strategy.
Is there a concern that because of the lack of those GPUs, even though they have come up with a new model now, the processing and the running and the usage rates could be constrained by how much compute they have?
So far it is. I think Alibaba was also very humble to say that new model is second to Cloud's Miso and Fable. So you can see the Chinese companies know where the limits are, but this is just for now, right? Give it like 5 more years, the story could be very different. And I was also very curious. I saw Huawei also released the new AI class. So the logic is pretty simple. I can't beat you on the individual chips, but if I can have a better integrated solution, that can also match the capacity of H200.
So we saw the tech rout in Asia and the US since Friday. Do you think that is justified, or is it an overreaction at this point?
No, unfortunately, I think the AI race, between the US and China, now go really to the next level. We heard the President Xi's announcement of WAIC, the new international organization on AI. In my view, it's very much an answer to the Pax Silica, led by the US. So my point is, the competition between the US and China on AI is not just between the two countries. Now it's really about, where to grab your partners and allies. The competition will be driven by US and China, but it's already on the world stage.
And when you look at the two bifurcation in the tech ecosystem right now, you have the US making leaps and bounds in the hardware side, right, and China making progress in the software side.
Right.
So where do you think China and US would stand in this race in the next 3 to 5 years?
Right. I'm really glad you mentioned the software part. We talk about those frontier models most of the time, but there are also very interesting, for example, like AI video generators, right? Chinese technology actually already dominating that space. Everybody knows, if you do like short videos, production studios, they already know CDance, which is created by ByteDance. So TikTok is already a sort of a headache for the US, and now the US had to deal with like what do you deal with like a CDance. They're already like the most popular AI video generator. So I think that China will go try to go stronger and stronger in the software part. They know the hardware, the chips will take time to mature, but this is still on their radar.
The Chinese government did approve a small amount of H200 chips import.
Right.
How do you read into this? Is it a reflection of the shortage we're seeing here?
The shortage is for sure.
How serious is it?
So I understand, based on my conversation with Chinese tech companies, they can deal with the situation. It's not ideal, especially for Alibaba, ByteDance, when they try to develop the next frontier models, you still need advanced chips. But for most, regular R&D, the Huawei chips, can do the work, so far. I think that the small quarter, that will be allowed, to be imported to China. This is a very much, diplomatic, gesture.
Given that many of these Chinese AI models are being sold at just a fraction of US pricing,
right,
how sustainable is this for the companies? Are they making losses and subsidizing consumers in the process?
In a way, it is. The Chinese government subsidies is obvious, right? We talk about chips, but you also saw the robots, right? This year, the WAIC has like the entire floor for robots. And then you go around, every robot company is like Beijing, Wuhan, Shanghai. So clearly government backed. The chip industry is the same. I think from the top level, the message is at all costs, no matter what. In the 5 years, you have to develop a China's homegrown chips that can match H200. So everybody put the money in, including the private sector. There will be some winners and losers.
And given the latest progress over this weekend with the new AI models, do you foresee more actions being taken by the US government to place curbs on any tech transfers to China?
I believe so. I think the US will, as we just said, I think Washington will get more concerned, to have a reflection on the export control policy. It will probably make Jensen Huang more difficult to convince, the Commerce and the Congress to continue to export more, advanced models to China. Given, Kimi, with the very limited supply of, U.S. chips, they already got to K3, right? Can you imagine if you have full access to H200, give it 2 years, the story could be different. On the business side, I think Wall Street would also be a little bit concerned whether models like K3 would grab some customers, which originally rely on U.S. models. But there's already a trend. A lot of companies began to use the hybrid model. They use the Chinese model for some basic research. They use the U.S. model for some advanced research. This is not good news for companies like Anthropic and OpenAI because they consider they are the king of the world, but now the position is being challenged.
All right, thank you so much. That was George Chen, the head of digital practice at Asia Group, and certainly a lot of challenges coming from the US players like NVIDIA and Anthropic from these Chinese startups.
Yeah, giving them a lot of competition to contend with. Min, thank you so much, our China correspondent there at the World AI Conference in Shanghai. We'll have more from that in the next hour and speak with ABB Robotics' Henry Han on his outlook on China's tech sector, plus our interview with Kai-Fu Lee on what the latest Chinese tech advances mean for the global AI race. More ahead on the Asia trade. This is Bloomberg.
Never a dull moment on Korean markets these days. Been a bit of whipsawing. We've got the Kospi still in negative territory by about 0.5%, but way off the session lows that we saw at the start of the day's trade, coming off the back of that 3-day holiday in which we had a couple of new AI models out of China just to throw in some added disruption. That said, though, look at SK Hynix, better by 1.8% now. Samsung Electronics has spent a little bit of time in positive territory today. At the moment, it is unchanged, and the Korean won, after briefly punching through 1490, just hovering slightly below that level at the moment. Now, the reasons for this: South Korea's leveraged ETF boom turned into something of a political headache for President Lee Jae-myung. Regulators are stepping in now after the product's amplified volatility in the country's flagship AI stocks. Bloomberg's Asia Equities reporter Winnie Su joins us now with more. So, Winnie, tell us a little bit more about the tweaks that were made and how that's helped spare some of the blushes for the Kospi today.
So when it comes to the overall measures that we are hearing from Korea regulators that do include how they are stopping the new listing of the single leveraged ETFs just because it has driven volatility up so much, so fast and so high. And that is really causing a trouble for the political status for the South Korea's president, because he has been pushing for the campaign to have South Korea's cost be above 5,000 and to have shareholder value higher. But we are seeing higher risks for a potential retail boom and bust just because of how volatile the market has been because of the leveraged products. And we are also seeing his rating, his votes coming down to about 52% from originally 67% in April. So we're really seeing regulators and authorities stepping in to find more stability in the market as well.
Yeah, it's funny. The Kospi's really moving the needle in terms of domestic politics in Korea, but it's not just that. Can you talk to us about the spillover impact that we're seeing for global markets?
Yeah, it really is that AI barometer for global markets these days. We are seeing fund managers across the globe waking up to checking Kospi numbers. And really, you're looking at today, for example, we are seeing Kospi pairing some losses and also with NASDAQ futures trading higher as well. So the correlation between South Korea's Kospi moves and the rest of the world is really increasing. We're talking about, for example, the 60-day correlation of Kospi and NASDAQ actually at 3 times of what it was when it comes to the 5-year average. And that really goes to show how this AI trade is really the core theme of trades so far this year, and that the core question we have is around the bottleneck when it comes to the memory chips. So Korea moves really give the first sense and first taste of where this supply-demand constraint is, and hence a first check for investors across the globe in terms of where this AI trade is.
Winnie, thank you. Bloomberg's Asia Equities reporter Winnie Su will be keeping an eye on how Chinese tech opens in the next hour. We've learned over the weekend that Moonshot AI is planning to list in as early as 6 months from now, and this comes after its latest model upended industry perceptions of Chinese AI capabilities. Let's bring our managing editor of Asia Equities, Lian Ting, too. So Lian Ting, is this shaping up to be China's defining AI listing? And what does this tell us about the race?
Yeah, it is. It definitely has the potential to become one of the most consequential China AI IPOs ever. One thing to highlight is that its commercial progress was very impressive in the year to date, I should say. In June, it hit annual recurring revenue of $300 million, and that's up 50% from just 2 months ago. So you can see how the valuation now is $30 billion. And after the release of its latest Kimi K3, its website kind of exploded because there's so many user signups, and it had to actually pause the new user subscriptions over the weekend. And one thing also to note is that this new model really challenges global investor assumptions that Chinese models only competed on pricing basis, right? But this model actually ranks pretty high. It's benchmarked against, those just behind OpenAI and Anthropic. So I would say it does show that China was able to narrow the capability in this AI race quite rapidly. And yes, if the IPO was to proceed, it's really going to be a big test for global investor appetite for China's next wave of AI champions.
It's not just Kimi that's pulling ahead. I mean, Alibaba previewing Qwen as well. Yeah. What does this tell us about, who maybe stands to benefit? Are we seeing a bit of a family feud within Chinese AI as well?
Yeah, that's really the ultimate question. So the biggest takeaway from this Qwen launch was that China's AI race is really accelerating fast, right? I should say late last week, it was all Moonshot grabbing headlines. And Alibaba almost immediately came out with its own upgraded flagship model. It shows that, as you said, there's that competition, of course, between China and US AI models, but there is also a big battleground between just the Chinese models themselves. So, there's a lot of recollaboration, I should say, among global investors over the weekend on winners, losers, long-term winners and near-term winners. And one thing that people can actually agree on is that Chinese hardware companies are most likely to be winners. We're talking about those cloud computing companies, chip makers, and data center providers. Because if Chinese models can be so good and so fast, there's going to be a lot of demand from global users. So Chinese hardware companies are really going to see an explosive amount of demand. And I think those are potentially the winners.
So maybe that plays out in Chinex, but what about Hang Seng Tech? I mean, we've been seeing those false starts there, right, to some extent.
The Hang Seng Tech is sort of in an interesting moment right now, just because it has been sold off so much more than the rest of the world. People are now paying more attention to the kind of value placed there. So it's potentially Alibaba actually may gain today with this release of the new model, right? There are also a lot of chatters about depressed valuations for the likes of Tencent. So you're seeing the kind of incremental investor interest going into that cohort, and mainly because of the depressed valuations, I would say.
Okay, Lian Ting, thank you so much for staying on top of all that for us. Bloomberg Managing Editor for Asia Equities, Lian Ting, too. We have more ahead on the Asia trade. This is Bloomberg.
TSMC will add $100 billion to its investments in Arizona to meet demand from US customers and to ward off ambitious rivals. Its Vice President and CFO, Wendell Huang, spoke with Bloomberg's Stephen Angle on the timeline of the build-out.
We are doing very well in Arizona. Our phase one using N4 technology is up and running. The yield is very good, comparable to its mother fab in Taiwan. Okay. Phase two, using N3 technology. Tools will be moved in very soon. Phase three will be N2 technology. The construction has already started. Phase four of the wafer fab and the first phase of the advanced packaging fab, the preparation work have started. So we're making real progress, and we're very happy about the status in the Arizona. Now, at this time, we continue to see very strong demand from the customer, the multi-year structured demand. And our key customers in the US, these are the people that are using the advanced technology. And that's why we decided to add on to our already existing investment in Arizona to add another $100 billion. Now, the timing of ramping these new fabs will depend on the market conditions and customer need. Having said that, capacity is not born overnight. It takes 2 to 3 years to build a fab. It takes another 1 to 2 years to ramp it up. But we'll do it as soon as possible, as soon as we can.
How do you view the indigenous innovation growing in China? CXMT on the memory side is going to be listing soon. They're getting a lot of attention. Of course, SMIC is a smaller rival to you on the foundry side. And also, Huawei has been touting, their alternative to Moore's Law, and I think it's Tau principle, logic stacking and the like. What do you make of the innovations and the progress China has made?
Obviously, they are making good progress. But if you talk about competition, it's not just China. It's everywhere. We have a big competitor in South Korea. We have another one in the United States. These are formidable competitors. But we always have competitors. We know how to compete. So it goes back to the fundamentals of this industry: technology leadership, manufacturing excellence, and customers' trust. Plus, you have to have the service mentality. And then you need to be not competing with your customers. So if you put all these together, TSMC is always the first priority, first choice for our customer.
Given everything you've just said about your competitive advantage, how much does that give you a significant advantage over the rising competitors like Intel and also Terafab?
The overall strategy for us is that we have very strong conviction in this megatrend. And we're doing everything we can, wherever we can, to expand, to support the customer's growth. And also demonstrate that we do not intend to leave any food on the table to anybody else.
And that was TSMC Senior Vice President and CFO Wendell Huang speaking there with Bloomberg's Stephen Angle. All right, let's look ahead to what the Open in China might bring us this Monday morning. We're about 35 minutes away there. Futures looking pretty good. Actually, Hang Seng Tech Index futures better by about 2/3%. TAIEX futures setting up for a pretty nice bounce as well. And of course, the context for this being those new AI models that we had out of China. First off, the Moonshot Kimi 3 model, followed quickly by Alibaba's Qwen, giving us something of a DeepSeek 2.0 moment, really. So we'll see how China Chinese stocks react to this. We did, of course, get some reaction to this on Friday when Moonshot's Kimi upended conventional wisdom on how Chinese AI tech performs, regardless of a lack of access to those leading-edge chips. We're seeing that reflected pretty profoundly in some of the price action in Korea today as well. The Kospi got off to a very rough start before paring some of its losses, but it's heading south again now. The Kospi off to the tune of about 1.5%. Some of those bigger names, though, SK Hynix in narrowly positive territory, up by about 0.8%, and Samsung Electronics just sinking a little as well. Different story here in Australia. The ASX catching a bid. We're better to the tune of 0.25%, but when you dig into what's actually moving, yeah, it's energy stocks. The energy sector better by about 1.8% now, because we have, of course, seen crude prices rising again. Brent there, $90.43 a barrel as the US strikes Iran for a 9th consecutive evening. We have heard from the US Energy Secretary Chris Wright as well, saying the administration intends to do everything it can to relieve pressure on fuel prices. That is it, however, for the Asia trade. We leave you with live pictures of Madrid, about 3 a.m. there, but the party going on. Spain, the World Cup champions. This is Bloomberg.